You're with us here on BTTV. We're tracking down markets as they close today. And, while it's been a good day, we've definitely cooled down. It's down to about 200 points, whereas we were at about 300 points higher in the middle of the session. 63,333 on the sensex, 18,825 on the Nifty. Let's pull up some of those gainers for you as well and take a look at what's driving the index. It's been largely the heavyweights, the big boys in IT that have been stealing the show. Tara Steel, Ultratech, Hindalco, some of the other major movers there. In fact, let me pull up the IT index and see if we've seen a little bit of a cool off there compared to what we were seeing perhaps earlier in the day. We'll take a closer look there, of course. No, IT is still strong, over 2% higher. So we'll take a look at where that cool off is coming from. Let's actually pull up some of the losers and see what else is dragging in today's session. But overall, remember, we're still trending at close to those life highs, almost a new record hit today, mid-session, but cooling off towards the end of the day. UPL, Aisha, ICICI Bank, some of the names on the downside so far in today's session. Neeraj Dhawan joining us from Quantum Securities. Neeraj, always a pleasure. Markets are not really giving us anything to complain about, are they, Neeraj?
Yeah, good afternoon. Yes, definitely. Last few days, market has been really been on fire. The large cap stock have been doing very well, and even the underperforming stocks, which were not performing earlier, whether it's IT, whether it's HDFC Twin, Reliance, they've also contributed a lot to the last leg in the rally. So I think market has been good, and even mid caps have started contributing now in the last week or so. So that definitely there's nothing to complain there.
What's looking exciting to you, Neeraj? Would it be financials, as the majority of the market seems to be eyeing at this point of time? Or would it be some of those consumer names or IT, which is in action today?
Yeah, actually, IT has been in action, but generally, our investment thesis is that you buy when good, strong bets, good, strong sectors come under pressure. So IT definitely there was a time to buy. A couple of months back when Infosys was trading at 20 times forward at 1400 around. So now we've seen a good rally happening from that bottom. So there is momentum which is strong. So there is pickup which we may see as far as the US markets are concerned, and which is supporting IT, and dollar index correcting is also supporting IT. So there, I think the pickup will help, but then that real momentum which you would have got from the bottom, you've lost half of it. So momentum is strong. You may get some upside. So now you need to be more very stock specific as far as IT is concerned. But financials again, PSU banks have really delivered a lot, and they should continue doing well because credit growth is strong, balance sheets are clean, asset quality pressure is not there. So next 2-3 quarters can be very good financials. But there, even if now if you see most of the PSU banks, if you value it 1 year forward, uh, price to adjusted book value, still there is a 10-15% upside potential in some of those names. I think NBFC space is one where there are a lot of attractive stocks where valuation is still attractive. So maybe the next uptrend in financial can be led by some of the NBFC bigger names. So I'll prefer NBFCs from these levels, and then there's this infrastructure basket which has been doing well, but I think there that momentum should pick up now because second half is very good for these infrastructure order based companies. So that is another sector one should be looking at.
Okay, fantastic. So that's definitely one area. Auto sales, Neeraj, let me just pull up some of the latest data for you. Two-wheelers lagging somewhat. Tata Motors, let's pull up those numbers. Maruti up about 14%, but that was off a fairly low base. Tata Motors, we've got car sales up 55%, but commercial vehicles down about 10%. What are you making of the data so far?
Basically, I saw Mahindra data also, which is also pretty
Yeah.
strong.
Yeah.
So as purely on valuation, if you see compare between Mahindra, Tata Motors, and Maruti, I think Mahindra would be the top pick there because of course the numbers, the month-on-month sale numbers have been very good. Plus, now the margin should also pick up because some of the commodity pressure has started coming down. So margin should improve. Numbers are still good. Sales are still improving month on month. So Mahindra valuation wise purely would be my top pick there. So Tata Motors can also be a dark horse, but Tata Motors though the domestic business is doing well, their EV sales, EV car sales are good, domestic sales are good. Though there's some definitely consolidation happening in the commercial vehicle space, there, which may also pick up according to me in the second half now. But Tata Motors, the main concerns have been UK and China. So if we have to believe that the problem there have peaked, then Tata Motors can also deliver from these levels. So I would say that Mahindra should be a good top pick there, and then followed by Tata Motors, where definitely there's some risk, but the reward can be good if international problem like UK and China get sorted for them.
Okay, fair enough. So that's on the auto pack as of now. From the broader markets as well, I'm just taking a look at some of the names that perhaps are catching our eye. Would you suggest venturing into the broader markets at a time like this, Neeraj, or would you stick with some of the safer, bigger names? Are you expecting any concern or volatility, and where do you actually find the value, in today's market, given the way we've run up in the last few sessions and weeks?
I would say that one should be specific, stock specifically investing in broader market also, because there are
Okay.
you'll find so if you want that extra return in your portfolio, you need to identify good management in the mid cap space where the valuations are attractive. So large cap space you will get returns, but then there'll be after this kind of a run up, after this high in the Nifty and the Sensex, returns can come, but they'll be sort of muted from these levels. But if you identify some good stocks in the broader market, then they can give you better returns. And there you will find across, whether it's like I mentioned, whether it's the infrastructure, construction sector, whether it's NBFC sector, whether it's food, consumer facing sectors. So these are sectors where you still find good opportunity in the broader market.
All right, fair enough. Let me just take a look at some of the stocks that are buzzing today. We've got Shilpa Medicare, L&T Tech, some of these names up about 8%. NIIT is looking good today. Midcap IT as a theme, in fact, continues to run up. Mastech's another one there. JK Cements, Kalpataru Power, for example, some of the other movers so far in today's session, and a whole host of others as well that are running up. PVR is up about 2 to 3% today, so that one's looking good, perhaps on the back of recent releases. So that's a new one on the list so far that we're looking at. What about when it comes to some of the consumer-driven plays, Neeraj, outside of the staples? How much do you really see the domestic demand story staying intact or even strengthening now going forward, given that there are some concerns on the macro environment?
Like, if you look at this quarter, you had the festival season. Plus, this year end, Christmas, New Year is also is a good time for retailers to go and buy. So that I think should result in some sort of improvement in these consumer facing, retail facing stocks. Which are into like something like a Aditya Birla Fashion or Arvind CRM sales. I think, and there is continued, momentum which is there as far as the hospitality sector is concerned. So their hotels should continue doing well. This quarter should also come out with better numbers for them. So I think these kind of sectors which are linked to consumer sentiment plus opening up, which is continuing travel, which is improving because of people wanting to travel for holidays. Business travel is improving. So these sectors should do well, I think, and results should also reflect that now in this quarter and the next quarter. So I think I will look at opportunities there and be positive for this sector for these kind of stocks.
All right, fair enough. Let's go across to Tanya. She's taking a look at what else is catching our eye in today's trading session. Tanya?
Absolutely, Abha. So basically, Zomato is in focus after multiple bunch trades. So shares of Zomato were up nearly 2% in today's trading session after a subsidiary of Singapore-based wealth fund Temasek emerged as a buyer. Now, on the very same day, Alibaba also sold stake in Zomato for 1,631 crore rupees through an open market transaction. Then shares of Shilpa Medicare also surged over 10% in today's trading session, most in over 6 months actually. So this is after the company's manufacturing facility in Telangana received Health Canada GMP approval. Then shares of TCS also, they were up nearly 2% after the company said that it has been selected by the Rail Delivery Group to design, develop, implement, and operate the UK's rail data marketplace. Shares of Adani Power are also in focus today. They were up nearly 2% after the company's secured creditors approved a scheme of amalgamation. Then Piramil Enterprises also, the shares were in focus. They were up over 4% today in the afternoon trading session. Now, the company's board of directors approved issue of non-convertible debentures on private placement worth 250 crore rupees. Then also auto shares are also in focus. So basically, shares of Bajaj Auto slipped over 4% after the company reported 19.3% fall in sales for November. So the domestic sales were down over 4% to 1.5 lakh units in November 2022, as against 1.58 lakh units in November 2021. Apart from that, all IT and metal stocks, these sectors are buzzing and are doing really well today. Tata Steel, Hindalco, HCL Tech, they were all up in the trade. And on the flip side, we have ICICI Bank, Cipla, UPL, HUL that are among the top losers. Back to you.
Thank you for that. Got to talk about TCS today, Neeraj, given the kind of move we're seeing, even on a TCS up about 2.5%. And, just also want to mention to our viewers, the sensex is now back up above 200 points, 63,300. So after a little bit of a mid-afternoon dip, I think it's trying to make up its mind about whether or not to move past that 63,300 level. But back to a TCS, 2.5% is looking pretty good. And would this be one of your major picks in the IT pack? I mean, between TCS, Infy, Wipro, and despite the dark clouds that everyone seems to be suggesting, with the environment overseas, they're definitely fighting back.
Yeah, like I mentioned earlier also, the opportunity for investors to invest for a medium to long term is when, the stocks are down and out and, these are solid companies, whether it's Infosys, whether it's TCS, HCL Tech, they're not going to go anywhere because the dependence on IT is really great. But now we've seen a part of the move already happening. So if you buy it today, you may have to, go through some, consolidation after a move, then they'll again do well. But if you're investing for a longer term, even now would not be a bad time to invest in a company like TCS. But the real charm for an investor is to look for opportunities when stocks are down and out, and they're stronger companies. So that's what I mentioned about Infosys also. At 1400, it was definitely no brainer. But now it'll give you decent returns, but that extra alpha that you would have created at those levels will not be there if you're buying today.
Okay. What about the, cyclicals and whether it comes to infrastructure, defense, some of these segments as well, Neeraj? Are you finding value there? Because everyone was really big on this pocket of the market and definitely one where we could see far greater potential for returns.
Yeah, actually, if you purely go for infrastructure, capital growth companies, I think that is one sector where the second half is very good. So they normally have 60 to 70% of the earnings coming in the second half. So I think L&T still looks very strong. They have a very strong order book. The stock is not that expensive if you compare on historicals. So that and last quarter results, we saw some improvement in the margins also. I think that margin improvement and should continue, and execution will pick up in the second half. So L&T would be a good investment from that. And the likes of NC, KE, all benefit with the kind of order book that they have and margin improvement. It will happen now with the commodity pressure coming down. And in the defense sector also, you've seen a good run up in most of these stocks. So some consolidation happening there. There'll be a company like Hindustan Aeronautics or a BEML, which have good potential for a long term. So even if investing now with a 2 to 3 years perspective, I think still you can invest in these companies. So one should look at dips in defense stocks to buy, and infrastructure is one sector where I think you can get good return from these levels.
Okay, fantastic. Neeraj, we're in the last month of the year. Most of the outliers or any factors are for the most part behind us. Even we saw crude cool off slightly. So now, are we really counting down to budget? Are you expecting anything major from the budget this time around, or are you just really expecting us to see perhaps just consistent trade over the next few months?
I think it should be consistent because this is the last full budget
Okay.
for this current term of the government. So I don't think there should be any big surprises, either negative or positive. I think they should also be consistent what they deliver, consistent on what they delivered in the last budget. I think there should be some continuity maintained there. So I'm not expecting them to really do something major in this budget. So market accordingly should remain stable from now till the budget, unless until there is any global event which really moves the needle here and there.
All right. Any sort of major expectations from the budget, sectorally speaking, or given the fact that there are perhaps some sectors that will still be a little nervous about whether it be capex, whether it be how the rate environment is going to move. Do you see any dampener effect, even if it's not on a broad base, but when it comes to a specific part of the market?
I think as far as the expectations are concerned, because the collections on the GST front has been really good. So one place where they can continue, because what is attracting investment in India is our GDP growth. So growth depends a lot on what is the kind of spending that the government does on infrastructure. I think whether it's railways, whether it's road infrastructure, so and power infrastructure, these are the sectors I think they will continue and may allot some more as far as development is concerned. So that is where you will continue our growth and you will continue getting the investment that is coming into our country. I think something positive can be there on that sector. And as far as dampener is concerned, I'm not really expecting anything really major to happen in the budget or even on the interest rate front. We've already seen interest rate going up, and you saw some cooling of inflation. So I don't expect RBI to come and really increase interest rates very rapidly from these levels. I think they've done their part, and maybe there can be a small increase and then can pause till they see what's happening with the economy. So I don't see any dampener coming from RBI on that front.
All right, great. Neeraj, thanks so much for joining us on the show today.
Thank you. Thank you so much.
Talking about factors at play, let's take you through the Fed chair's comments on slowing the pace of rate hikes. Jerome Powell's comments have fueled the rally across markets, and smaller rate hikes could start as soon as December. Listen in.
Monetary policy affects the economy and inflation with uncertain lags, and the full effects of our rapid tightening so far are yet to be felt. Thus, it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. The time for moderating the pace of rate increases may come as soon as the December meeting. Given our progress in tightening policy, the timing of that moderation is far less significant than the questions of how much further we will need to raise rates to control inflation and the length of time it will be necessary to hold policy at a restrictive level. It is likely that restoring price stability will require holding policy at a restrictive level for some time. History cautions strongly against prematurely loosening policy.
All right, cutting down to close now. Let's take a look. Seems still to be a good day, but definitely markets were trying to keep up towards the end of the session. We had a very strong start, but kind of mid-session did cool off a touch. Still up above 18,800 on the Nifty, sensex at 63,261. Below that 63,300 mark, but just about. IT was the one leading the way, and then of course contribution from the likes of a Reliance. We also had some of the key other index heavyweights, some of the metal majors also participating. IT was up 2.5%. TCS also, Infosys across the board actually. Let's take a look at Reliance. That cooled off by the end of the session, so it was flat by the end of the session, 2726. Pull up some of the other Nifty gainers for you just to give you a view of what really went down in today's session. TCS there for you, 2.5% higher, and we'll pull up some of the others too. Broader markets also seeing stock-specific moves coming in today. There you have it, some of the gainers: Ultratech, Hindalco, Tata Steel, to name a few. On the downside as well, we'll take a look at some of the names that didn't quite participate. There you have broader markets up about 0.7%, so plenty of action there. And ICICI Bank, Aisha, UPL, so auto sales, of course, a talking point today. Two-wheelers lagging somewhat. But M&M was decent, even though not seeing it on the exchange. Cipla, Bajaj, all of them cooling off somewhat in today's trading session. It's it's the fact that markets are continuing to trade at close to those life high levels is giving all experts and traders a really a comfortable cushion at the moment. No untoward triggers, nothing much that's expected, and markets are showing resilience. So continuing to trade above that 18,800 mark and looking strong, looking good. Broad-based activity on the index as well. Nothing major to worry about on the downside, and consistent moves on the upside as the market sees a little bit of rotation and sideways profit booking as it continues to tread at those life high levels. All right, we're going to leave it there on the show today. Thanks so much for watching.